Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the gold market. So today, once again, we have prepared the vehicle report. We try and take a look at the fundamental background. In general, guys, currently we suppose that although previously maybe you have read only Forex reports or you read only the gold reports, currently it makes sense to just at least briefly to go through both of them. It's just because the fundamental background and information that we have to consider are too significant, and we just can't put it in just in a single report because it will be a bit too boring to read all this stuff. Personally, I do not like to read really too extended reports, and but the few moments that we have to consider, we just need to pay attention to them. That's why some part of the information that I have put in the Forex report, I do not put it in the gold report, just give you the link in reports that you could consider it, but information that we provide in the Forex report has the same impact on the gold market. It's because the current background, which is stand in a situation, United States economy in particular, it has impact on all commodities. On the gold report, we just take a look at specific moments how this situation could make impact on the gold market in particular. So in general, speaking on the gold market, we do not see any deviation from our plan that we have considered. We said that market has to be under pressure within the couple of months more. In general, we suggest that situation should start changing somewhere in the mid-summer if we do not get any escalation, military escalation in western Ukraine. Currently, we see that the chance for that stands significant. In this case, maybe the changing of the situation in the gold market comes earlier. But if everything goes as it's going right now, by our suggestion, situation starts to change in the favor of the gold somewhere in the midsummer. Also, we have to adjust our suggestion of the capital flows from the overseas to the United States. It seems that capitals were coming a bit faster, at least from the European Union, and the capitals from the Japan narrowing significantly is just because it is too fast appreciation of the commodity prices that narrows the trading balance and the current account of the Japan to the minimal size, as well as the 20% devaluation of the Japanese yen. This is double impact on the economy, which suggests that the flows of the capitals from Japan to the United States actually is coming consistently within the few decades, now is drying, and United States really will feel bad without this money. So in general, it's mostly three providers of the liquidity to United States markets: Japan, Great Britain, and the European Union. And in all these donors of the capital, now situation stands difficult, which is makes the narrowing of the capital flows in the United States. That will be additional factor that accelerates the bad events in the economy. In today's report, we also have taken a look at the gross domestic product and consumption. We suggest that investors wrongly assess the consumption at a good level just because it shows the positive numbers. In fact, you could see that the personal savings has dropped for the 3 quarters, and it means that households just eat them, trying to support the consumption on the common usual levels. So when these savings totally will be spent, consumption starts to decrease, and that leads to the consequences and actually the sequence bad chain in the economy in general. So decreasing consumption leads to narrowing of the services, narrowing of the revenues of the companies, which is trigger the bad events for the companies that have not very stable financial situation. So all the stuff we have covered in the reports. Speaking on the technical side, currently we are following with the same pattern. Actually, with the performance that we have here, we could say that the chance the market should breach the 1830 area looks significant. And now we are mostly watching for this ABCD pattern and agreement around 1825 area. That's our midterm target. Probably it will be completed. So market currently is not at oversold anymore. All trends right now stands bearish except monthly one. On the weekly chart, on the daily chart, trends are bearish, and that makes us think that this action probably should continue. Besides, on the Fed meeting that's coming next week, we suggest that Fed just can't ignore the recent statistics that we have, and we suggest that their comments will be a bit more hawkish than usual, which is also make the pressure on the gold market as well. So, but at the same time, formally, we have the pattern that we discussed on Friday. This is reverse head and shoulders. As you can see, setup for the bears has worked perfect. As we said, keep an eye on the possible reaching of this A, B, C bottom XOP round neckline and the confluence. Once it will be reached, you could consider taking a short position. So here's also, by the way, minor butterfly has been formed. Those of you who would like to just, if you're a perfectionist, that's just how market really is turned down by this minor butterfly, complete the XOP and collapse starts. So if you have taken short position here, move stops to the break even and just watch the movie. It's nothing to do more. Now, for those of you who would like to take the short position but have missed this opportunity, you could watch for a failure of the hand short pattern. In particular, first thing that you have to watch for is breaking for this agreement. If market fails to stay above this agreement and start upward action, just break it down. That will be the signal to you that market is going lower and we are coming to the breakout for the lows and continuation of this ABCD pattern that we have on the daily. That's why first watch for this area, it's breakout, and second, you could consider taking and using stop sell entry order somewhere around 1875. So you could place stop sell order around this area. Once market starts breaking these lows, you're step in on the short side of the market. This is first possible scenario that you could consider. Second possible scenario, you could also consider the pullback up from the support area, some retracement. But this is tricky, it's just because at this point, when the market starts bounce, you will not be sure that hand shoulders fails. It's just because upward bounce, it might be just the starting forming on the right arm. So it's a bit more, well, maybe not risky, but it will be some lack of confidence and it will be a bit more difficult. So this also you could consider. For a bulls correspondingly, you should watch for absolutely opposite scenario. You are watching for this level, watching for minor patterns that might be formed here. I mean, drop your time frame to the 5-minute chart, for example. Watch for the same minor butterflies, or maybe some other pattern will be formed here. And if you'd like to buy gold, that will be the point where you will have to make the decision. The attractiveness of this point is that you could place very tight stop. So it will be needed just place stop somewhere below this area. So around 1880 probably. And save lots of money for your possession. It's just because of the really tight stop placement. But to be honest, guys, with the Fed on the horizon and with the performance here, my personal view is that, well, bears probably have a bit more chances to succeed here, as the chances on the reversal and upward reaction, well, it's just my opinion that it has less chances to happen. Well, but this is just our suggestion. Let's see how reality turns. Maybe we are wrong and market will be able to show here's a healthy reversal. But by just indirect signs, I suspect that it will be more probable this will be failure of the hand shoulders because acceleration stands too fast. And overall background currently still stands against the gold by far. So that's actually what we have in the gold market. Let's keep watching and follow our trading plan with the pattern that we have here.